Hey there, listeners. It's Friday, and you're tuned into Capital Markets Quickie. I'm your host, Endrit Sella, and let's kick off the weekend with something we all think about, but might not always talk about: debt. Yep, you heard that right. Now, this might not be the flashiest topic, but boy, is it important. The latest from the Federal Reserve has raised some eyebrows. Credit card debt? It's through the roof, hitting record numbers in the third quarter. We're talking a nearly 5% jump from the previous quarter. So, why should we care? Well, it turns out some folks have been riding the wave of pandemic savings, but now they're hitting the bottom of their piggy banks. And what happens when prices keep shooting up? People reach for the plastic credit cards. Experts are kind of split on this one. Some are sounding the alarm, worrying this could mean trouble for our wallets and maybe even the economy slowing down. But others, they're not sweating it too much, saying the big picture still looks okay. Now let's paint a picture here. Imagine your savings account was looking pretty sweet after 2022, but then prices started to jump like they were on a trampoline. We're talking inflation, folks. And that savings rate? It's taken a nosedive since last year. Economists are saying, look, when you're out of savings, you've got to keep up somehow. And borrowing becomes the go-to. And that's what's been keeping our economy buzzing: consumer spending. But if that spending is all on borrowed money, well, that might not be the sturdiest foundation. Here's where it gets real. The ones feeling the pinch the most: low-income earners. They're getting squeezed between high prices and those pesky high interest rates. And guess what? Delinquency rates on loans are ticking up too. Those credit card interest rates are nothing to scoff at either. We're talking an average of nearly 21%. So, for folks on the lower end of the income scale, this debt thing is a big, tangled mess. But hey, not everyone's worried. Some experts point out that the big spenders are still the upper and middle income households, and they've still got some cash to burn. Alright, so that's the scoop on the credit card debt surge. It's a mixed bag, really, but one thing's for sure: the way we're spending and saving is changing, and it's something to keep an eye on. Before we wrap up, let's just say managing debt is tricky, but understanding it, that's the first step to getting a handle on it. So, until next time, keep your finances sharp and your investments smarter. This is Capital Markets Quickie, signing off. Have a great weekend, everyone.